Yeah, as we roll on here, we do have a special guest in the studio with us right now. You can see her right there based on that shot right there, but we'll bring her up a little closer. There she is right there. Amy, wave to the crowd. You are streaming out on Facebook Live right now. Thanks for coming in. Amy comes in maybe once a year, maybe once or twice a year, maybe definitely around this time because it's tax time, and she's got some other good stuff she's going to share with us. So how you doing, Amy?
I am well and blessed.
Okay, man. So we're kind of chit-chatting off before we started here. You got some kind of fun stuff you wanted to share with us here about hurricane, casualty, and theft loss tax saving opportunities. That's kind of a long sentence there, but I'm sure you can sort of break that down for us.
Absolutely. It's that time of year when, in the territory at least, so many people have experienced disaster losses of different types. You're hearing all about the aid, and of course some of our FEMA and SBA people are leaving, but nobody is talking about the tax aspects.
Okay.
So I put together a workshop and some things on that to try to help get the word out, because this is going to have a huge economic impact as far as tax savings for some people.
Okay.
But it's going to be years
Yeah.
because of the amount of losses they've incurred.
Okay. So this, what you have here is a sort of a PowerPoint presentation, I guess, right?
Yes, and I went ahead and brought you a copy so you'd have a little bit to look at there.
Okay.
One of the things that I had an opportunity to do a couple of weeks ago was to present this on a soft launch here, and had about 35 in attendance. AARP is working with me, and we're going to be doing some more presentations that will be here on St. Croix,
Okay.
and then also in St. Thomas. So we'll be advertising those pretty soon. We're looking at some of the facilities.
Okay. So you're gonna be presenting this information at these different events.
Yes. We're going to have a real short snapshot here, but this takes about 2 hours, and there's a ton of information in because there's a lot of misinformation out there. And I
Okay.
like to build in time for people to ask questions so it's applicable.
Yeah.
And they leave with tools they can work with.
Okay. So how does this work? I have a home. It was partially destroyed by the hurricane, and of course I'm paying taxes, property tax, and all this other stuff. I have a missing roof. So how does this all come into play?
Well, you're unique because a lot of our community, there's a question of, well, the first thing you always are asked is, well, did you have what? Insurance.
Insurance, yes.
All right.
Yes.
Well, even if you had insurance, chances are you have a deductible.
Yes.
Well, what if you're underinsured? Well, then you're not going to get as big of a check as you thought you were going to get.
Yeah, and you hear that a lot too. This whole thing of people being maybe underinsured.
Yes.
Okay.
And so maybe the claim is prorated. That basically means you get less. You're
Okay.
getting based on what you're actually insured for.
Okay.
Then you have those individuals who went out and maybe they got something from FEMA. Maybe they got a grant. Well, a grant is not taxable to an individual, but a grant is taxable to a business. So there's a nuance there.
Okay.
Maybe you didn't qualify and you got a rejection from FEMA. Does that sound familiar? So they said, well, why don't you go over and see those people at SBA?
Yes.
You went to SBA. Well, some of you got loans and some of you got
Nothing.
rejected.
Yeah.
Well, when you got the loans, it didn't mean that they covered your loss. It meant you got a loan to replace those things. So you still have deductible losses. And there is some confusion that, perhaps I had $100,000 in losses. Well, I got a loan from SBA for $80,000, so I must only have $20,000 in losses, and that's not correct. You had $100,000 in losses. You just borrowed money to make $80,000 in repairs.
Yeah.
And so there are so many different pieces that each person is unique, but in walking him through it, it's to help you see how extensive the damages really may be and what that means to you tax-wise.
Okay.
So if an individual owned their home and they got damaged by the hurricane and they had there's no insurance there, can they claim something on their taxes?
Absolutely.
Okay.
And because we are in one of the federally declared disaster areas, they have waived the 10% of your AGI, which basically means that we got a freebie, guys. We really did. And you'll take $500 off that is kind of like your deductible or what you're absorbing.
Right.
Okay.
And then the rest of it can go on your taxes as a deduction. And Soup, what would happen if you had $100,000 in losses and your taxable income was only $50,000?
Right.
Well, how much taxes do you think you pay that year?
zero. Okay. Okay.
Zero.
Okay.
And then you still have $50,000 you haven't used up yet.
Okay.
So there are some options depending upon circumstances where a person could go backwards 3 years,
Uh-huh.
or they could go forward up to 20
Okay.
and eliminate those tax liabilities going forward. So if your income was normally around 50,000, it's a number, folks.
Right. Yes.
And you had 100,000 in losses, you probably would end up paying no income taxes for 2 years.
Okay.
Maybe longer, depending upon what your situation was. Because again,
Because we
everybody's
went
so
through that.
different.
Because we went through this hurricane.
Exactly.
Okay.
Okay.
And that's for each loss. I mean, I wouldn't want to wish
Wish
this
this
on our
on that
territory.
territory, right, definitely.
But what if we're back and we have another significant storm that comes through in a year, 2 years, 3 years? Well, that is an entirely different loss.
Okay.
So I don't want people to miss out
Okay.
on what opportunities they really have.
Okay.
So now, for an individual now that had damages, he have insurance, can he claim something on his taxes?
Absolutely, because again, what most insurance policies have is a deductible,
Uh-huh.
but you have non-covered items. Maybe you didn't have your contents insured,
Okay.
or they were only insured for cash value,
Value.
not for
Replacement.
replacement cost,
Okay.
which are very different things.
Okay.
What about your car?
Right.
Do you have any damages to that? And the one area that has really been surprising to people is think about your landscaping. We've got some incredible trees here in the Virgin Islands. We do.
Yes.
What's happened to a lot of them?
They down. They
They're
fell.
gone.
They go. Yeah.
Well, if you've got a property that has a bunch of lovely trees on it the day before the hurricane and the day afterwards, 80% or 90% of them are gone. Your big mahogany tree, it's gone. Your mango, your lime, all of them are gone. Those also have an economic value. It decreased the value of your property. There can be tax losses for those too.
Okay.
People aren't even thinking of all of this because they're often so involved in the structure.
Yeah.
Just
They're
the
thinking
basic-
about just
basic
the structure.
Gotcha.
Okay.
And they're
Yes.
not able to maybe open their eyes to a wider picture. So that was one of the things I was seeing, that we really need to educate and help each other here.
Yeah. One of the things I wanted to ask, and I hear this on the news a lot, is maybe people at times, homeowners are underinsured. And I often wonder, how can you be underinsured? I mean, like when you put insurance on a car, can you be underinsured in a sense? For a vehicle?
Yes.
Because doesn't the insurance company sort of dictate? You have a Mercedes truck and it's a 2018 and the value is 80,000 and this is what you have to pay. So in a sense, how do you become underinsured? I mean, they tell you what you have to pay based on
The value of the
the value and the year of the car. But how does that play into a home? When I hear this, you could be underinsured.
All the time.
Yeah.
That's one of the biggest things that's happening here.
Yeah.
That's
How-
one of
how-
the bigger. And I'm
yeah.
going to go back up on a car because you mentioned the 2018. You can buy a brand new car and drive it off the lot. And if you parked it at the curb and then you tried to sell it, is it a new car?
No.
Or is it a used car?
Used
It's a
car.
used car.
Even if it only has 5 miles on the odometer, is it a new car or is it a used car?
Used car.
It's used.
There is a tremendous amount of value that disappears. Now, if you were the unluckiest person in the world and you just bought this brand new $80,000 truck and you drove it out the driveway and you made it to the first stoplight and you were wiped out on both sides from the guy running the red light and threw it at, and it's demolished your car. You may have used vehicle price unless you have a rider on your policy that will have the ability to give you the new value.
Okay, and that's
So sometimes
additional.
it's additional, but you have to know sometimes what you're getting. And some people will look at it the other way and go, well, how can you make that any cheaper? And I'm concerned that some of the things that has happened in the territory in the past, people are struggling financially. We know this.
Yes,
This is not
yes.
news. Here it is. You've got your home. It's going to be $9,000 to cover this home and to cover your contents. And if you need to be relocated, that will pay the rent for, X amount of months until you can get everything rebuilt. And it's $9,000. And you look at that and you go, what can we do that's a little cheaper than this?
Yeah.
And so they come back and they say, well, if we took the contents off, that will drop it a little bit.
Just
and they
cutting.
oh, I got to, yeah, take that off. I'll do fine.
Yeah.
And then you start doing this take off.
Yeah.
Take off. Well, what if you take off the wind insurance? What if you take off this? What if you take off this? What if you take off the earthquake? What about, and what can happen sometimes is, think about it of a vehicle. You can buy a vehicle that has all of the accessories. Is it a very different vehicle than the vehicle that has been stripped down to basically you've got a steering wheel?
And 4 wheels, right?
They're very different. So you can have individuals that maybe they haven't updated their policies in years, so that they originally, which is common here,
Okay.
maybe they had their house and it was worth $200,000. But I added a few rooms on, and I did some other things, and boy, I upgraded, and I replaced all those kitchen cabinets, and now my house is worth $350.
And they didn't adjust the insurance.
But I didn't adjust it, so
Okay.
I'm underinsured, or I've stripped it. So it's very unique, but
Okay.
those things can happen.
Can happen.
And
Okay.
it doesn't always happen all at one time. Sometimes it's a little bit gradual, or they haven't really kept up with what the rebuilding costs are
Okay.
per square foot.
Okay.
What about the businesses now that got damaged during the hurricane, and the same issue? He had no insurance, but the hurricane was impacted the businesses. Can they claim something for the taxes if when they're going to file for that year?
They
on
can.
that business?
And again, it's going to be based on how they have some things set up. But depending upon whether they had insurance or not, some of the businesses that had insurance that are not able to reopen, they can have what's called a business interruption insurance. And it will pay, again, there's an agreed upon amount, but it will pay them to continue to either keep people on the payroll or to pay operating expenses, whatever they've got during that interim. Some of the policies will even help pay to relocate you and
Okay.
get you set
So
back
that-
up.
okay.
So when you're working with some of these insurance agents, you need to be realistic on what are your needs. Sometimes you're going to wince a little bit, and people need to make decisions. Is this important enough to me?
Right.
Yeah.
Because what I was hearing on some of the recovery teams is that we are expecting a minimum of 40% of our businesses closed by the hurricane not to reopen.
Wow.
40%.
If your business was impacted by the hurricane, the odds are about 40% you will not reopen. And if they don't reopen, we all lose.
Yeah.
Exactly,
Yeah.
because we can't afford to be losing all the incomes that's
Yeah.
And
that's
the-
fueling this economy right now.
And the jobs.
yeah.
And, everything that business bought was money that
It
came
came
back
back
into the
into the
community.
community, right.
And the taxes and the employees, everything they bought and didn't have jobs. And they did something that was rather unique because of the disaster for some of the self-employed individuals, is we were granted emergency disaster unemployment for self-employed individuals. Because a lot of them, of course, they lost their
Right.
jobs, even being self-employed. So down at the Department of Labor, they have some specific things, but there were up to 27 weeks of unemployment that was available to self-employed individuals, which was really rather unique, because a self-employed individual generally
Those are
never
good.
qualify for
Right.
that.
Gotcha.
That was another indicator of how severe the damage was to the economy here.
Okay. So are they continuing to doing an assessment right now to see exactly how many businesses have been affected? You don't have, is anything?
Some of it is going to take time,
Right.
because right now there are a lot of businesses that even if the adjuster's been out, even if they've settled the claim, even if you've been handled a check, do you necessarily have the work crews that are able to do the work to put you back together again?
Back up again and running.
And if you have the crew, do they have the materials?
If
And
that's what I've been hearing
do
a
they
lot.
have the permits? Do we have a place for the workers if we could bring them in to stay?
Nope.
So it's a
Yes,
problem that it's
it
gonna
could
take
keep
time.
Yeah.
Yeah. So this information that you're sharing with us, is this like federal information, or is this like local Virgin Islands information?
It's a mixture, because some of the
Okay.
programs are on a federal basis, like the federal, self-employed unemployment, that's at the federal level.
Okay.
When you get down to some of the FEMA and SBA, that's at the federal level.
Okay.
You get down to the insurers are writing business here in the territory, so those are more local.
Local, okay.
But we don't have enough adjusters, so they have to bring them in from all over. And that's been an issue. Not trying to, defend them, but to be realistic. In the Caribbean in the past, my understanding is, if you had a hurricane a couple of islands over, well, it would affect one or two, and then everybody from Puerto Rico or here or down island would go, and they would come help, and then everybody would go back home. Well, how many islands were affected with those two storms?
Yeah.
And so whereas we may have went to help others, we don't have enough people to help ourselves.
Yeah.
And Puerto Rico is in the same
Same
spot,
yeah,
and Barbados,
definitely.
and all of these little islands are struggling, and so that's why they've had to bring people in from far away, and they're working as fast as they can. But they're also fighting fires in California, and there was Hurricane Harvey before us,
Yes,
and then
yes.
there's Florida, who got the tail
Tail
end.
end, yeah.
So it's really been unprecedented, the number of them that have been needed.
Right.
Okay. Now, you're going to be having 4 seminars,
To
2
be-
here and 2 in St. Thomas.
To begin with,
Okay.
yes.
And you said it's a couple hours worth of information that you have to share, and then maybe another half an hour of people asking questions.
I build the questions in during the presentation, because what usually happens is we come up with a topic, there'll be a question, well, my situation is such and such, how is that going to work?
Okay.
Or, so I try to address those during it, and then also have some Q&A time at the tail end.
Okay.
But right at about 2 hours, and you'll be able to leave and have a very good understanding about what exactly is a casualty loss,
Okay.
what is not a casualty loss.
Okay.
What if you have given somebody $50,000? I have it in one of my examples. You gave somebody $50,000 to come out and fix your house.
Uh-huh.
They did $5,000 worth of work, and they evaporated like smoke. Now what? You have a theft loss.
Yeah.
So, again, I don't want to see these things happen, but we can be vulnerable here
Definitely,
with people wanting
yes.
to get things done, and circumstances change. So it's not just dealing with the hurricane losses. I'm also working with, we potentially could have theft losses, and some people have experienced the hurricane and a theft.
Yes.
Because, unfortunately, there are
I
those
know,
amongst the
unscrupulous,
population
very unscrupulous.
that saw
Yeah.
that as an opportunity.
Mm-hmm.
Right after the hurricane, what they didn't take, then
They came and took
they
it.
came and took.
Yeah.
So there's a lot of different pieces there for individuals.
Okay.
Amy, this new tax law that the President Trump
Mm-hmm.
passed into law, what kind of effect it will have here with us here in the Caribbean, here on St. Croix, really, in the Virgin Islands?
Well, understand it's just over 500 pages, and I can tell you I have not memorized them all. But what I can tell you is that part of that, as I mentioned, gave us, it was a gift.
Uh-huh.
Usually when you had a casualty loss, you had to take off 10% of your AGI, which is your adjusted gross income. Folks, it's the number at the bottom of the first page of your tax return. That's what you need to know.
Okay.
So if you had that proverbial 50,000 in income, you'd have to take off 10%, which would be $5,000 off the top you wouldn't get to claim. Well, they waive that. So in our case, instead of taking that, you have to take 500 off the top. That's like a gift. That's like a gift to everybody.
Okay.
That's one of the things that changed. The other thing that changed is that starting in 2018, you are not going to be able to claim casualty losses on cars and some things that you were able to before. They have to be federal declared disaster areas. So in the past, if someone stole my car that was parked out front and went and burned it in the jungle until there was just a carcass left, I would be able to claim that as a casualty loss, because most of us just have liability here.
Right.
Not so in 2018, unless the sucker's burned up because the whole island is declared a federal disaster area and caught fire.
Okay.
So there's some changes there.
Okay.
The other thing that I'm looking at is, if you are familiar with your taxes, on the second page, you normally would have your standard exemptions, or some people itemized.
Itemized, right.
Well, that amount is going up significantly. Doesn't matter whether you're single or married or head of household, but they are taking away the dependent exemptions. So for some people, it's going to be a gift, and you're going to get a bigger number.
Okay.
But if you have a larger family,
then it work against you.
That's right. You gave the gift
Yeah,
to
to
somebody else
somebody else.
because your tax bills or taxable income's going to go up.
Oh, yeah.
They
Suppo-
reduced tax brackets too. We used to be 10%, 15, 25 and up from there.
Uh-huh.
And now it's 10%, 12%, 22. So
Mhm.
there's a lot of moving parts. And one of the things that I'm suggesting to my clients is we take a few minutes and we do a projection for 2018 with all of these little moving parts we know
Right.
to see if you should increase your withholding allowances or if you should decrease them.
Mm,
Again,
okay.
everybody's going to be a
Maybe a
little
different.
different
Yeah.
on
Right.
whether it's a gift or if it is a levy. Yeah.
What about flood insurance? How does that factor in here?
Oh, I'm glad you brought that up. There
Okay.
is often a lot of miscommunication about what flood and flood insurance is.
Okay.
To make it very easy, if you're looking on the screen at this point, and then my radio audience, you're not going to be able to see it, but imagine that you have a line up on the wall. So if I have a house and the flood waters came up, and it usually makes a pretty even line all the way around the house.
around. Yes, yes.
Think about if I have flood insurance. Flood insurance was designed to cover everything up to that water line on the wall. Now, everything above that would be covered by your homeowners, your hurricane or your wind insurance.
Okay.
Now, but Amy, the roof came off, and that's why my house flooded. Your house did not flood 5 feet from the roof coming off. It runs out. That's
Yeah.
usually because the whole area flooded.
Flooded, yeah.
And some of the times when people were calling in the claims from here, we got all excited because, windows popped, rain, oh, my house flooded. It was just horrible. Every room I had to get water out and everything else. Well, the person on the other end of the phone may be thinking flood. Oh, water line, flood. Now, if you lived here and you were used to working with people in the Caribbean, others you'd say, flooding, oh, that was awful. And your roof came off? Was it ankle deep? Was it up to your knees? Oh my Lord, was it clear up to your waist? And if you said, well, it was up, well, it never got more than my ankles because
Ankle.
we kept pushing it out, you didn't have a flood. But if you're using the word flood and you don't have flood insurance, without that little clarification, the person on the other end of the line may be thinking flood
Yeah.
when you were just having water on the floor. See the difference?
Yeah.
So sometimes even on the semantics,
So
It can
someone
cause some issues.
someone would have to come in and verify that, right?
correct.
Okay.
But the flood line is not hard.
Okay.
It's usually really
Very
stinks.
stinks.
and
Yeah,
it
yeah.
smells really bad.
Yeah.
And it's a perfect line.
All the
All
way
the way,
around,
yeah.
yeah.
And it's amazing how you can look at the neighbors and anybody else, and your lines are all about the same place.
Okay. So is flood insurance required here?
It is not required everywhere, but
Oh.
there are flood zones and things that are here on the island. And of course, they're re-looking at some of those maps because of what has happened recently.
Okay.
And think about when you have buildings, some of our guts have changed from the runoff and also where they were clogged up. And
Right.
water will find another
Oh,
way.
definitely.
Yeah, yeah.
It will find a way.
Yeah.
And so, depending upon where you're at, but sometimes people get complacent. I lived in the Midwest before I moved here. We had what were called 100-year floods. Well, that means
Every
about
100 years.
once in 100
100
years, we had a 500-year flood. That means maybe once in 500 years. It is entirely possible that you get lucky and you get 2 100-year floods that are 3 years apart.
Yes.
That doesn't mean it's still not on average.
Yes. yes.
It just means you got real lucky.
Lucky, yeah.
And we had some friends of ours that they had a bed and breakfast, and it was one of those awful, awful rain dumping storms and further up the river, and they had never had a problem. They'd lived there for years, but they kept hearing noises, and they looked out and realized that the water was almost all the way up on the first floor. They were sleeping on the second floor, and they had to get out by helicopters and boats. It had never
Get like that.
never
Yeah,
flooded
good like
there
that.
in anybody's lifetime.
Yeah.
Didn't mean it couldn't.
Couldn't, right.
Just
definitely.
hadn't in popular memory. And
Right.
I think we probably had a little bit of that here.
Okay. Yeah. A lot of people were saying that their place got a little water, but I don't know if it was flooded.
Yeah. See the difference?
Yeah. Like I was telling you here, there was water almost to like right where you are, all the way back to the door. But I mean, wasn't flooded.
There's no line on the wall.
There's no line.
No,
Oh,
there's not an even line through every room. Maybe
Right.
that's a better way to
Way
put
to
it.
put
Just
it.
like
Yeah.
you put a chalk line.
Yes,
up,
yeah.
Yeah.
Okay, I got
a
you.
little water on it. But see, but if it's, oh, well, the place flooded. Oh, the whole front end. Okay. What is that? Well, I got my ankles wet.
Yeah.
That's
yeah.
not a
the
flood.
flood.
That's a
Yeah.
little water coming in.
There's a little water coming in. Okay, so you got to make sure that you phrase
The
that.
phrase that right.
And
yes.
describe what it was. Yes, I had 3 windows blow out and I had water all over the floor. It was maybe ankle deep.
Yeah.
That's not a flood.
Flood.
And that lets that person on the other end also to understand
Right.
Yeah.
what you're trying to
To
say.
say. Yeah.
Yeah. One of the things that I see in the presentation on page 12, you said my house was totally destroyed, and I'm sure that there's some people that here would fit into that category. Here again, I guess their insurance, what the value of the insurance would kick in in place, right?
Right. And generally, if you have a total loss, think about, I got a slab. There's not much left. The cistern stayed in place, but really, other than that,
Yeah.
I got a slab and a few pipes
Pipe,
picking up.
yeah,
That's
so-
it. Maybe the potty, but and nothing left. When you have a situation like that, when you are given a significant size check, one of the questions I've gotten is, do I got to pay taxes on this? It depends on whether you've had a gain or not. So let's pretend that you paid $100,000 for your house. 35 years ago. And you've put a fence up and you've updated and you've done whatever. And so over those 35 years, you've put $100,000 of stuff into it. So now you got $200,000 in this house. Well, with the day that it was destroyed, that house was worth $450,000. So you got a $250,000 profit on
Paper.
Anyone who's lived in that home as a homeowner for 2 of the last 5 years can have a $250,000 profit, fellas, and not pay any taxes on it. Now, if you're married, your spouse could have another $250,000 if they lived in it 2 of the last 5 years. So in most cases, for a total loss,
Right.
most people are not going to owe any taxes. It is possible, and if you do have a gain, then you have to pay taxes. But generally, a single person, the first $250 is tax-free, married couple $500, and that usually covers just about everybody.
Okay. Okay. Here you say I am self-employed and I receive 27 weeks of disaster unemployment. That money is tax-free to me.
False. Yeah, that was one of my knowledge check questions. Anytime you receive unemployment, whether it is VI unemployment or federal unemployment, that is something that is included on your tax return, and that is taxable income. And yes, we all know it's less money than you normally
We
make,
get.
Yes.
but it's
Yeah,
still
tax
taxable.
effect.
It's still taxable.
So that's part of that. There are so many different pieces for individuals.
Okay.
But if you were that same person who'd gotten that unemployment and you had qualified for a FEMA grant and they gave you $5,000 in a FEMA grant, the FEMA grant is not taxable,
Okay, but the unemployment.
is.
but the unemployment is.
Yes.
Okay.
Yeah. So
I
it's-
guess it because it was during the disaster, so
Yeah.
that it covered the disaster.
Unemployment is always
Taxable.
taxable, yeah. And but the key word is grant. Grant for an individual,
Is always
think
usually
free money.
right?
Yeah, but grant for a business has to be included in income.
Okay. Okay.
Nuance.
Yeah. Another thing here I see on page 15, you have some stuff here about farmers and their loss,
Yeah.
and those in agriculture. So I guess they're eligible for some stuff too.
Yes, one of the things in looking goes back to people don't always realize the value of some of those amazing trees. Think about a farmer, and we have some here. How long does it take to grow a coconut tree that's producing? That coconut tree
9 to
has a
10
value.
years.
Yeah.
At least 9 to 10
It has a value.
years.
What about your mango trees? What about your limes? What about all of these things that you had, and they had a value? Well, what was the value on the day they were destroyed? Some individuals will have a cost basis, meaning that, well, I paid $5,000 for all of my stuff. Well, the first $5,000, that's just your cost basis. but when it all disappeared, it was worth $65,000. So there's some significant differences, and when they're working with their tax people, they need to know. As a part of that, I have 2 individuals that I have found so far on St. Croix that are certified arborists. So for our individuals, anyone along those lines, you need to contact somebody who's got the credentials to get it in writing, to do the valuation, so that if this is flagged or pulled, you can pull it out and say, this is how I established the value. I didn't just look at it and say, it's a $10,000 tree. Well, get it for me in writing, and we'll decide if it's really a $10,000 tree.
Okay.
But I think people really don't realize the value of some of those.
Okay. So you would need someone to come in and sort of estimate, I got 25 coconut trees and yada, yada, yada. Okay.
Right, because it changes the value of your property.
Okay.
If you have a property that has a bunch of lovely lush trees on it, shade, fruit, is that a very different property than the neighbor next door that has not one tree on it?
Yeah.
Or all they have is a couple of stumps that are left in the yard?
Okay.
Does it change the value?
Okay.
Oh, absolutely.
Okay. Okay, that's
Aesthetics
interesting.
of it.
That's
Yeah.
interesting. So what do you have to do? Because one of the things that I heard, and I guess it still applies, that I guess they say take pictures.
Yes.
So obviously, I guess you could take pictures of your land with 25 coconut trees on it, but generally you probably wouldn't do that. So this is when the appraiser comes in and you tell them, well, I had 25 trees, so I guess you could see some remaining parts of the tree, and then he would just figure the math out from there, basically.
Yeah, and they have, it's not my field, but they have some specific guidelines and tools. They measure the girth of the tree at a certain point. There's the branches. But even if you did not have some things, Google Earth is a wonderful thing. Because even with Google Earth, you can go back and you'd be able to see what the foliage looked like on a property.
before.
Yeah.
And then what it looks like after.
Okay.
And what some of the things are that remain.
Yeah.
But
And I
if you
think
cleaned it up too doggone good.
Yeah. And Google Earth is from what I can see, has actually been is up to date, because when you look, you can see the blue tarps all over the island.
Yes.
So it looks like a lot.
It is.
Well, within a few days of the storm, there were already pictures up where they had flown back and forth over, and you could see the damages. But from living in the Midwest, to me it was extremely clear where tornadoes had touched down and which directions and paths they had went.
They left on.
So those were some of the early pictures, and then they've done some more.
Yeah. I saw those. What
I
else?
see here on September 29th, that was like the law, I guess. I don't know if this was the same. This was part of that law on page 22. The President Trump signed into law H.R. 3823, the Disaster Tax Relief and Airport and Airway Extension Act of 2017. The act, which was passed by Congress the day before, provides temporary tax relief to victims of Hurricane Harvey, Irma, and Maria. So basically, we are getting a tax break due to the hurricanes.
Absolutely. That comes back to when I mentioned before that gift of that you do not have to exclude 10% of your AGI was one part of that.
Okay, so
Yeah.
that's the $5,000 automatically that would automatically be not deducted.
Right, if your AGI was
50,000,
50,000. If a person's AGI was 100,000, it would have been 10,000. So it's all
Gotcha.
based on what your income is.
Okay.
And
Okay.
there were some other things that went along with that. There were individuals, because of the significance of these storms, in Texas and other places, you were allowed to take hardship loans out of your 401k, and there's some very special provisions on being able to, instead of having to include all of the income in 1 year and pay taxes and penalties, that you could spread it out over 3 years, and there's other nuances there. So for some individuals, maybe they didn't get tax advice right off the bat, but they ran in and one of their biggest assets was their 401k. Well, that's taxable.
Yeah.
And so there were different provisions that they have put in to try to make it easier for people to get over it.
Okay.
But again, there's always the tax man. He wants to help you to a certain extent, but
Yeah.
he also likes to be paid.
Yeah.
Most likely, that's
Yes.
what he's in business to do.
So did I mention there were just over 500 pages?
Yes, you did. Yes, you
And
did.
I thought it was hysterical if you look at it and says Disaster Tax Relief and Airport and
An
Airway
Airway
Extension
Extension
Act.
Well, what does that mean?
That means they tagged it on to an airport and airway extension bill.
Okay. Because I think they kind of
Just
They
add
found a
things.
place to slide
Slide it
it.
in. Yeah.
Yes.
Yeah, you know those words amendments
Yeah.
that we hear here sometimes? Yeah.
Very
well,
so often.
Yeah, that's what that happened.
Um,
So there, like I said, there's many different pieces of it, and it just depends on what's your dynamics.
Mhm.
But all of it, falls into different people have different resources. You got different situations. There are individuals who we know that left island.
mhm.
Right.
Okay, you left island. Do you have moving expenses? Well, absolutely. Well, what are the rules on claiming that? What can I do? So there's so many different pieces
Okay.
for individuals because it's had an enormous impact.
Okay.
So like Amy, now, like a business that you were saying, like a business was not able to open up since the hurricane. Is he able to claim this on his taxes when he filed? Is this going to be something that is taxable for him, for that individual that have that business that cannot open back?
For the losses,
Yeah.
well, if they've spent money out of pocket or losses, they'll be talking with their tax advisor, and there are things that they can claim.
Uh-huh.
But they can't claim loss income if they normally go on a cash basis, which means when it goes in the bank,
Right.
you claim it as income.
Uh-huh.
But you can't claim income you never got,
Got.
or a loss for income you never made.
Mm.
Is that-
Catch 22, right?
Exactly. And
Yeah.
that's why, if they did have some of the insurance to help them get over this,
Right.
otherwise they're going to have to hit reserves or do whatever it takes. And that's part of the reason where some businesses that maybe they're underfunded,
Mhm.
maybe they didn't have enough reserves, maybe they were already on a shoestring,
Mhm.
Okay.
and that's just too much.
Yeah.
And they can't get over that. They
Yeah.
have to change.
It's so interesting that that what you just said there, Amy, about not claiming cash that you can't get. But at the same token, the electric company wanted to estimate our bills going forward from a certain point. So it's kind of
Well, it's the whole thing of estimating, I think, is what throws it off.
so how
Oh, yeah. I heard about the Facebook bill for $30,000
Right.
and that the house has no power. I heard about that one.
Yeah. Yeah. A lot of people are fussing on Facebook about these huge bills. I got mine, and it's still very manageable, but other people are like complaining. I know this one young lady, I don't know her personally, but she was, I think she had just walked out of WAPA, and she jumped right on Facebook Live, and she was venting. And it sounded like she wasn't really getting the straight story from whoever she was talking to. You could tell she was very frustrated. I mean, I'm not sure how that's all going to kind of work out,
Yeah.
but
And I think sometimes it's not just WAPA. I think it is just a buildup. It's a little piece, another little piece, another thing today, another thing that's been hit. I didn't
Yes.
get what I expected.
Mm.
One more no, one more denial. What do you mean you need another document?
Yeah.
And I think people
Yes,
sometimes, it isn't what has just happened. I
Mm.
think it's everything up to that just made the volcano has had
Erupted, yeah.
enough.
yeah.
lose the top? Yeah.
What if someone, for some strange reason, did not have homeowners insurance?
That's because the house is usually paid for.
Okay, so if your house is paid for, you don't need insurance.
You don't have to
You
have
don't
it.
have to
You
have
don't-
it.
you don't have to have it,
You don't
okay.
Most of the lenders require you to have homeowners
Homeowners.
insurance for this
Just like
kind
the-
of an event.
Good, just like the
They're
cars,
Yeah, they're
you know,
protecting their
Yeah,
loan.
their investment.
Okay.
They're not protecting you.
Okay.
They're protecting their loan.
Their loan, I got you.
The ability to have that property rebuilt. You had a lot of individuals here in the community who had their homes paid for, and the Crucian Way,
Mm-hmm.
maybe they built it a little bit at a time.
Mhm.
So they never borrowed money from anybody
Yeah.
if they could avoid it.
Yeah.
And so now they've had significant losses. One of the stories that I had, and there really wasn't much you could do, and I think this is pretty typical. Dad built the house over a period of time. The house was paid for.
Mhm.
Dad didn't want to pay for insurance because insurance costs too much money. We have $150,000 in damages to the house that Dad built.
No.
Dad isn't living in the house because Dad had medical issues, so we had to move Dad back stateside to go live with my sister.
Mhm.
Well, Dad's only income is his Social Security check, and Mom died about a year ago. Dad doesn't qualify for a loan because Dad only has about $1,000 a month from Social Security income, and so he doesn't qualify for a $150,000 loan
Loan.
that he can't pay back, so he gets denied. So the son says, well, is there any way us kids can get it? Well, do you own the house? No, but we're going to own it someday. Well, you better figure out how you're going to get it fixed, or this house is just going to sit like this.
Yeah.
Well, now what do?
Let him sign over the name. He's alive, so let
But
him
even
sign.
then, yeah, or buy it, and then the kids can maybe go back and get a loan on the house to get it fixed. But the
Right.
kids have to be able to what?
To
Qualify.
provide, to maintain the money.
And they have to want it. And, in retrospect, because I deal with a lot of families, there are some subjects on money that families won't talk about. And we got to quit that here in the VI.
And that's
You need, parents, if the intent is to take this house and pass it on to your kids, and I'll be blunt, you're having a little money trouble making the ends meet. Sometimes we need to get the family and have a conversation and say, this is my reality, kids. I'm getting $1,000 a month. It's cost this much money for my utilities, my whatever, this isn't it. If we need to keep insurance on this house, or we want to I can't afford to do the maintenance anymore.
Right.
And I think we need, 1 to 5% for me is a good number for maintenance. So if you got $100,000 house, you need to have $1,000 to $5,000 a year
put
just to
aside.
maintain it.
Yes.
So maybe, kids, to make this work, we need to come up with maybe $5,000 or $10,000 a year. Everybody put a little bit in every month or once a year, and we can keep the coverage on the home. We can keep the house maintained so that when I pass on, there's actually something to pass on.
To pass on, yeah.
Yes.
Not one of these relics that we see
And just
that-
sitting there.
that's
and
just sitting there and nobody can fix it. Nobody wants it, and nobody wants to pay to make it right. And so we need to have some different conversations. And, well, that's another class series that I'll be doing here coming
Yeah.
up on some financial literacy. But those kind of things, I think we can avoid going forward. We can't fix yesterday, but we can sure do something different tomorrow if we want to.
Yeah. And that sounds just more or less like the family has to come together and sort of work out the details of that.
Right.
There's a certain point where secrecy is not healthy.
If no more, yes,
And
definitely.
I'm getting the phone calls, where like the gentleman I told you, or another one, I was like, Mom's house is damaged. She's lost part of the roof. Her part of the roof crashed into her car. She only had liability, so now Mom doesn't have a car. The house is damaged. She didn't tell us kids that she let the insurance lapse on the house
Oh.
a couple of years ago because she couldn't afford it, and she's only got liability on the car. Where do we go? My first question, how much money does Mom have, and how much money does she make? And then you look at it and say, well, let's grab a piece of paper. What are her utilities and that? Well, she doesn't have the money to repay the loan. And she won't qualify. And so you have heartbroken people who have put a lot of their sweat equity
Yeah.
and their money and time into this house.
yeah.
And they don't have a lot of options
Options, no. Right.
on what to do with it because they maybe didn't see how devastating this could be. Sometimes it was, well, we'll save $5,000 a year and not
By
paying
not
those
pa-
premium, and then I'll have that money to
Money.
fix it.
But you never put it aside.
Yeah.
Yeah.
So we need to stop that.
Let me ask you something on a different gear. With the GRS situation here in the Virgin Islands, and if you're already a GRS member, they continue to take your money. They don't want to stop. And can you go outside separately and open a retirement for yourself now? Besides having that, also you could still do that on your own,
Yes.
separately,
If
without
you're-
becoming an issue with the people that you employ for anything like that.
But understand, they're going to still continue to take that out of your
Yeah, I
paycheck.
mean,
So
yeah,
this is your other money.
that's my other money.
That's
Yeah,
your other money.
Yeah, so
Yes.
that's something I was just I was kind of interested in.
If you're an individual, generally you will be able to do an IRA, which you are able to take off of your taxes and save money now. But
Uh-huh.
when you take it out later, whatever it's grown up to, you'll pay taxes on.
Right.
Yeah.
You can do a Roth, which is not deductible now, but none of the account or the earnings will be taxable later. depending upon your income, most people will qualify. Once in a while, you'll be phased out because you make too much, but there are other options you can do. If you, those, by the way, if you're under the age of 50, $5,500 a person. If you're over 50, $6,500 a person, so you got some room. If you're a self-employed person, you could do that, or you could do what's called a simple IRA, even if there's only one of you, and that you can put up to $14,500 in. Then if that's not enough, you could do a 401k, even if there's only one person. That's called an individual K.
Right.
That can be up to $49,000.
Okay.
So there's options.
Options.
And then there's also an SEP IRA, and there's some other things that are based on a percentage of income. So really, if you're looking at the ones that are tax related, those are some options. But then you can do what are called non-qualified plans. A non-qualified plan, you could use an annuity. You could, some people use life insurance contracts. Some people just put it away in a mutual fund, and in their mind, they say that account is for my retirement. So you can do things related to the tax return. You can do things that are not related to it.
Okay. Okay.
You have some options.
Yes.
You say here on page 29, you have the final memory refresher, true or false. You have up to 24 years, up to a 24-year window to deduct eligible losses and reduce or eliminate your income taxes.
Yeah. Let's pretend that you have got the kind of loss nobody wants to have, but you got it.
Okay.
You're the lucky person. Your income, it's bad. It's
Okay.
really bad. Depending upon your circumstances on that, let's say 2017, we already know it's going to impact the 2017 tax year, because that's when Hurricane Maria and Irma, that's when they were here. But there are provisions that you can carry that loss back 3 years. So you could go 3 years before, that's 14, 15, and 16.
Okay.
And from 17, you could also go forward up to 20 years.
Oh,
And
okay.
so you have some choices. So really, that's like a 24-year window.
For you to.
Honestly, I would never want anybody to need all
That
24
before
years.
Yeah.
However, what if you owned a whole bunch of properties, or you had a bunch of stuff and you were pretty much wiped out? You got losses. And I don't know what your income's going to look like this year, next year, the next 5 years. We can look over our shoulder and see what it was. But some of the discussion that we've had on some of the clients I've had with some significant losses is, do we really want to go backwards 3 years because we are not confident that we are going to see a refund paid in any short period of time?
Okay.
And do we want to just carry this forward and kiss the bills goodbye going forward and adjust our withholding down to zero?
Okay. Okay.
So choices.
Yeah.
And most
Some
people
tough choices too.
But again, this is where you usually need some guidance. And we have got some excellent tax people here.
Okay.
You know, I feel I'm pretty good, and I know there's some others that feel that they're pretty good.
Right.
And this is an area that they need to be well versed in. But we do have some individuals that do just a little bit of taxes, and they won't put their names on the forms. But if you go back and start talking about this, they may get that glazed look and go, I don't have any idea.
Yeah,
I can't help you. That's usually a really good signal that you probably need to do something else. And it may be that you've had very simple taxes for the last several years. You used TurboTax, you whatever, or paper, and you were fine.
Right.
Maybe this time you need that help because you need to do it right. And then maybe you can go back to doing it. But
Yeah.
for this,
Yeah. For this situation now, yeah.
yeah, that
Yeah.
might be the difference for you.
Yeah. I don't know if we touch on this, but I know that on the federal level, the tax process and the tax rules and regulations have changed. But has anything changed on the Virgin Islands?
We mirror whatever happens on the federal.
Okay.
So what happens stateside happens here with rare exclusions.
Okay.
One of the exclusions is with the Obamacare tax that people are used to calling it that. It's for your medical. That applies when you're in the States. But since we cannot purchase individual health insurance here, we were excluded from that. But there are
Right.
very few things
Okay.
that don't apply
Apply
here.
to us. Okay.
Yeah, very few.
Okay. Okay.
And we do have some incentives like the EDC program, economic development, they heard that. But again, those are very limited in scope
Okay.
that they would be available here
So-
for some of the companies.
Okay.
They have
Okay.
to qualify for it, on a pretty regular basis.
Okay. Okay. So do you have your date set for the seminars you're going to be giving, or is that still sort of in the planning process?
We will be having those in March, and we're looking and trying to have them by the third week of March.
Okay.
But because we're still working at securing some of the facilities.
Okay.
We're on this island. We were hoping to get the UVI auditorium because we would have plenty of space there and ample parking.
The Great Hall.
Yeah, down
Okay.
at the Great Hall.
Right.
Yeah.
And so, and again, you all are aware, we've had a lot of places that are hurricane damaged. There's a lot
Yes.
of things that are different. And so it's, sometimes you're competing for the same space
Space, yeah.
because of all of the programs and the different things that are going on.
Going
so
on, yeah.
we'll have that, but contact AARP.
Mhm.
They're going to have that, and there'll be quite a bit of publicity of what I'm expecting on that will be coming out. But again, just touching base with the office periodically and, hey, do you have this? Because I believe we're going to be asking for reservations. And then the other program that we will be doing is an 8-session financial literacy course.
Mhm.
And that will be held, there'll be 2 sessions each day. So there will be 4 sessions, like every Thursday or something along those lines. And we're firming up the dates. We'll have it here in St. Croix, and we will have that in St. Thomas.
When you say financial literacy course, can you be certified or just information you will be giving out?
There'll be about 2-hour sessions each,
Uh-huh.
and the 8 different sessions, one of them is going to be about managing your cash flow, your debts, what does your credit score tell
Okay.
you? Can you afford a house? What is an affordable house? There's another section that will be talking about some of the highlights on taxes. What's the difference between a tax credit
Mhm.
and a deduction, and how do you manage your tax? It's called working the brackets.
Mhm.
What are some things you can do? There's another session that deals about all different kinds of insurance, life insurance, air ambulance, long-term care, life insurance, disability. What are all of these? Do I
Yeah.
really need them?
Yeah.
The one I think that would be very important when you're looking at passing assets between generations is going to be account titling. What does it really mean when you have tenants in common versus joint tenants?
Mhm.
What is it when it's held in a trust? What does all this stuff mean? So there are 8 different sessions with 8 different segments to really help people get an education about finances. And again, with the goal that when you walk out, to identify where you've got some issues and what are some potential solutions.
Okay.
And it will be free. There's a nice plug. AARP will be sponsoring that, but it will probably be limited to no more than 30 to 40 people per session because it's, again, it needs to be meaningful.
Right.
Mhm.
But if we have the attendance, then we will be doing more sessions.
So you
Okay.
gotta make
Those two.
reservations, then you have
Yeah.
to make reservations to come in?
Yeah, so
Okay.
that will be coming out really soon too, and that will be continuing through the summer even into the fall.
Okay. Okay, sounds good. I see here that it says that in the federal disaster area, you have up to 18 months to make the election and carry the losses back to the prior year.
Mm-hmm.
Wow.
So, think about when you're filing your taxes. I am assuming that you have filed your 2016 taxes.
Yes.
Yes.
I've met quite a few people that we are filing taxes now because they didn't do them for 2-5 years, something like that, and you can't get an SBA loan unless you are up to date on taxes.
Yeah.
So it gives you the opportunity that if I used up all of my income in 2017 and I still had losses, then I could go back even to the return that I'd filed for 2016 and ask for additional refunds for those years.
Mm.
So, yeah, you've got some options, but there are usually, a little bit of strings or dates that are key on those.
Yeah. Anything else, Amy? It's almost, it's like 9 p.m. here.
Mm-hmm.
Anything else you want to add to the conversation real quick?
Don't be afraid to seek out professional help this year.
Okay.
Some of the individuals say, well, you know, I really had no damages. Lord bless you. That's wonderful.
Yeah.
But there are some things that are going to be available to you in 17 that are not going to be available to you in 18 and going forward. This isn't the year you can afford to make a mistake.
Because of the hurricane and what we went through.
Yes.
Okay.
In the territory, and not just the territory. Think about some of your family members that have experienced some of those fires in California and Harvey in Texas. We got family all over,
Yes,
most of us do
yes.
here. People have been impacted in Florida. Some of the same information is going to apply to them. And so it's not just us. I'm trying to help us because this is my family, this is my
Right.
community. But this is also information that nationwide needs to be talked about more.
Okay. All right. Our guest tonight is Amy Rose Herrick. She is a financial advisor, financial professional.
There you go.
She knows all the stuff about the taxes, the do's and the don'ts, the medical insurance do's and the don'ts. If you need help, how do people get a hold of you?
Very easy. You can call my cell phone, and that number is 785-224-8954.
Okay.
You can also reach me by email. Very easy. Amy, A-M-Y, at Amy Rose, R-O-S-E, Herrick, Herrick.com.
Yep.
And I have another website that I have some of my books and I have some of the other teaching aspects of what I do, and it's at moneywithamy.com.
Okay. Amy is the key word.
That's, well, I can be found. Google me and you can find all kinds of things that are
Okay.
out there. I've been writing for many years. And
Have you
done quite a
written
bit.
any books on this stuff particularly?
Not on this particularly, but it is a topic that I probably could develop.
Yeah.
I have done the one title that is Family Medical Planning, and when we're doing session 7 with the AARP, we will be having a copy of the book that will also be given out to the attendees that AARP will be providing.
Okay. Okay. Good. Our guest tonight is Amy Rose Herrick. She is a financial advisor, financial professional. If you're here in St. Croix in the Virgin Islands and you need help with your taxes, just a better understanding of the do's and the don'ts and what I can do and what I can't do, Amy's the person to contact. She'll definitely help you out there. Said she's searchable, findable
I'm findable.
on Google. You just type in Amy Rose Herrick and it'll pop up, and give her a call. She's been on our show a couple times. And just has a lot of good information that she shares with everybody. We want to thank you for coming out again. Soup, any final words?
Amy, thank you.
It's
Wish-
always a pleasure with you guys.
Same
It just
here.
is.
Thank you. Thank you.
And continue to do what you're doing. Wish you more success. Most I bless you. Rastafari live. One perfect love.
Yeah, we like to say one perfect love is our prayers and his blessings. When you put it all together, man, you get one perfect love. So, Amy, thank you. And hopefully this will lead to some good things. We definitely need some of the seminars or trainings and your guidance.
Tax reliefs.
Yeah,
Tax
a
relief.
better understanding of what you can do and what you can't do, because I think a lot of people are probably just don't know, or they're just probably still sitting in awe as to what has happened,
Right.
and how they're going to get out of this.
No.
Roof come off, hit the car. How am I going to replace all these things? How am I going to fix all these things? So I guess when you get confirmed, all the stuff will be made.
I'll be back to you.
Yeah.
I'll let you know the dates.
And
Bob.
then you can attend the seminars wherever they're going to be held. Amy, thank you. We're out. This is the It's Your Perspective Talk Show every Tuesday, Wednesday, Thursday. We'll be back tomorrow with another fun show. And on that note, we're out. Enjoy the rest of your evening, everybody.
you.
Bye-bye.